What's up, people? Welcome back to the channel. My name is Tevi, and this is Invest with TCLAWS. The focus of today's video is going to be on Tesla. We'll do a quick recap of the S&P500 inclusion and why it matters for Tesla stock. We'll also watch a clip from Yahoo Finance and what their guest speaker believes will happen to the stock post-inclusion. I'll add some commentary where I see fit. We'll then discuss my thoughts on the information presented and what I plan to do about it. And finally, wrap it up with the percentage gain or loss for my portfolio this past week. All right, let's get into it. So rewind the clock back to November 16th. The SP committee announced that Tesla would be included. This was primarily due to the fact that they had cleared the hurdle of being profitable for at least 4 quarters in a row. They've actually achieved 5 since then. Okay, so let's take a quick look at the chart. You can see there that at the time of the announcement, the stock price was right around 400. And then since then has shot up quite significantly, about 70% from where it was to the record high close of Friday of 695. Now, understand that for mutual funds and hedge funds to buy 80 billion's worth of Tesla stock, they have to sell other stocks to get that money. So that's reflected there in the S&P, Dow, and NASDAQ, all ending in the red, so that people could free up enough money to buy Tesla, which then shot up by roughly 6% there for a total market cap of $658 billion. That is insane. What I didn't expect is what came in the after hours. So obviously we know that the stock price shot right up. But I want to point your attention to the red arrow there. So there was right around the closing time, there was a large dip in the stock price. So that's right there. You can see that the volume is way up, right? So 204 million shares switching hands between people. But even more insane, take a look at that arrow right there at the end as the stock price just shot right up. I mean, I can't think of any other time where I've seen anything take off like that. Maybe the closest thing to that would be...
You might want to step back a little bit. Maybe a little bit more.
Oh man. Okay, seriously, you gotta admit, that scene is epic. And frankly, I love Superman. I've been trying to figure out a way to include that in my videos, so here we are. But honestly, that feeling, that's how I felt when I saw the price shoot right up. Anyways, let's get back to it. With the closing bell price of 695 and a market cap of 658, this is going to give Tesla a 1.5 roughly percent weight in the SP500. Why does that matter besides the fact that the increase in price has made your portfolio swell if you're an investor already? Well, it's the fact that, frankly, this legitimizes Tesla and the electric sector as something that's here to stay. Most of us who are Tesla bulls already knew this, but this is for the broader market, right? This is for everybody else who in the past shied away from the stock or just did not see electrification as a means of transportation and something viable moving forward. This is kind of like that signal that, yes, this is here to stay and this is part of the industry as we move forward. So at this point, you're probably asking yourself, well, okay, this is great, right? So portfolio went up a decent amount over the past month. So what should I do now? Should I buy? Should I sell? Should I hold? What can I expect post-inclusion into the SP500? In this clip, we're going to hear from Gordon Johnson. He's a longtime Tesla bear who's been covering the stock for many years now. And you'll hear the terms bears and bulls thrown around quite a bit in this video and in the mainstream finance media in general. What those terms are referring to is people's belief in whether or not the stock price will go up or down for a specific stock. So somebody who has a bearish view or is a bear on a specific stock is somebody who believes that the stock price will go down over time. Somebody who's bullish on the stock believes that that stock price will go up over time. And depending on where you fall on the spectrum, you'll adjust your investment strategy accordingly. So let's watch this clip here.
I want to spotlight the action we're seeing here in Tesla with shares in the green following an interesting report on plans for the Model S and X at the electric automaker. Tesla planning to idle production for those models through January 11th, according to an email for the plans obtained by CNBC. It's an interesting production pause considering those models are not exactly the most popular there, only about 11% in terms of deliveries in the latest quarter. And a new report out from Electric saying part of the reason could be that the automaker has already met its goals for Model S and X deliveries for the fourth quarter. Interesting there, could be driving the price action we're seeing here today. For more on that, I want to bring on our next guest. That would be Gordon Johnson, GLJ Research CEO and founder here with us. Gordon, appreciate you taking the time here to chat. I mean, it's obvious that Tesla's been focusing more on the cheaper Model 3 here. That's the main driver, of course, the main shift, kind of ahead of the incredible rally we've seen here this year. But what do you make of that, and how important is it for Tesla and Elon Musk when we talk about the Model S and X?
Well, I think it's baffling some people because just a few days ago, Elon Musk put out an internal email that was leaked to the public that said they were effectively production constrained. They needed to significantly increase production. And then a few days later, we find out they're shutting down production for the S and X for 18 days. Look, I think it's one of two things. One being, A, being rather demand is a problem, or B, being rather they need to retool or refurbish the model to make it more attractive. Either way, it's a demand problem.
So let's stop here and jump into the demand problem that he keeps referring to. This is one of the typical comments that people who have a bearish view on Tesla have been making for years now. And they've been talking about the competition coming and how Tesla will lose market share over time. Just take a look at this chart here. Let me know what you think. Do you think that Tesla has a demand problem? Just take a look at the chart. The chart here is courtesy of InsideEV.com. Shows you global sales by model from Q1 to Q3. And clearly, the Model 3 is leading the way by a very wide margin. The Model Y is doing also extremely well. Now, it's important to note that the Model Y was only introduced earlier this year. So to be number 3 on a global scale, clearly not a demand problem. Also, notice that he never acknowledged the fact that the commentator did clearly state that the Model 3 and the Model Y is Tesla's bread and butter. Those are the ones that they're pushing out. Those are the ones that are relatively priced and that people are buying up in high volume, right? The Model X and the Model S are much more expensive. They're not going to sell as much, and therefore Tesla can afford to shut down those lines as we're nearing the end of the year. The goal really is to sell as many Model 3 and Model Ys as possible to reach that goal of 500,000 cars for the year that Tesla guided towards at the start of 2020.
So which do you think it is?
I think it's probably a combination of both. We know those models haven't sold well, so I think that's a problem for them. But I think there's other issues that we can get into. A couple of actions Tesla has taken recently that suggest demand is really a problem.
What might those be, though? Because when we're talking about a stock that's up so much there this year, people have been talking about the idea that demand has been strong, considering the delivery targets being shattered quarter after quarter for Elon Musk and co. I mean, it seems like things are moving in the right direction, but I know there are other critics out there that point to increasing competition, not just from the traditional automakers, but a lot of other ones out there, mainly NIO in China, maybe eating into the China growth story that's propelled this stock so much this year.
Right. So I think what's important is, look, we're the biggest bears on the street, and our estimate for 4Q deliveries is 180,000. The street consensus is below us. I think everybody's below us. So I think the street overall is sandbagging their numbers, which allows Tesla to continue to beat. And if you looked at China, right? So in China, people got excited about in October, the sales were about 12,000. In November, it looks like they jumped to about 21.5 thousand. We believe what enabled that was an 8% price cut at the beginning of October, which we really saw in November. But the problem is that price cut was enabled by them changing technology, LFP batteries, which are now being widely reported in China to only get 50% of the range in the winter and only get 50% of the range reported today in Europe in the winter in cold weather.
Okay, so let's jump back in here and clarify. Cold weather, it doesn't matter if it's an electric car or a battery-powered car. cold weather will impact your range. And we can go to this website here. I'll bring it up on the screen. Okay, so here we are on fueleconomy.gov. It is certified by the EPA. The paragraph that I'm pointing to here explains that fuel economy can drop roughly 39% in city and highway driving, and range can drop by as much as 41% if you are heating your cabin. So pretty telling there. I think the paragraph down below then goes on to explain what are some of the reasons that could lead to that loss in range efficiency. And as we scroll down here, heated seats, windows, defrosters, and heater fans used again to heat the cabin will impact your range. It also points to the air being denser and how that increases drag on the vehicle, reducing efficiency, and tire pressure decreasing in colder weather, impacting rolling resistance, again, making it harder to achieve the best energy efficiency. Lots of great information. I'll link it if you're interested in reading more about it.
And we also think there's issues with respect to the coming S&P inclusion.
And I mean, I was going to say that all of this you're pointing out here, as we look to that inclusion on Friday, certainly the announcement was a big catalyst for the stock. You say that you're very bearish on it right now. We're looking at Tesla's trading at $635 a share, roughly. Where do you think fair value is?
I think fair value for Tesla is probably around 60 to 80 bucks. I think fair value for Tesla is probably around 60 to 80 bucks.
Yeah, you heard that right. He said 60 to 80 bucks. But you know what? Let's listen. Let's pay attention to what the thesis is. And actually, I also want you to pay attention to the interviewer reaction to his price target. It's pretty telling, but let's keep going here.
We think it's going to head there. We think it happens next year. We think
60 to 80
competition is going to be a
bucks.
problem. Want to talk? No, go ahead. I'm sorry.
Did you say 60 to 80 bucks?
Correct.
Walk me through your thesis.
Right. The thesis is simple. Tesla's currently trading at about 200 times earnings, whereas on average, automakers trade around 6 times earnings. Tesla is seen as a technology company, but they don't have the technology that people think they have with respect to there's no there with respect to the batteries. And with respect to S&P inclusion, I think this is important. Since the S&P announced they were going to delay the inclusion about a month and a half ago, or they were going to include them about a month and a half ago, there's been about 1 billion shares traded. And prior to that, when they reported a profit in 2Q, there was 1 billion shares traded around that time. However, based on the S&P's own estimate, there's about 130 million shares that need to be purchased by indexed fund holders. So the point is, on that inclusion, you're going to potentially have a lot of shares that have been front run on this inclusion that are going to have to be sold. So you could have a significant sell-off on Friday or before Friday as some of that money that went into Tesla stock looking for inclusions comes off.
I'm going to skip over the fact that he said that Tesla is not a tech company. That's an argument that most bears put out there. They'll say that Tesla is only a car company. That's a topic for a different video, but we'll give him the point of the stock price post-announcement, as I showed earlier, went from the 400 range all the way up to 633 at the time of the recording of this video. And a lot of that money that was poured in were people that were kind of positioning themselves in order to make a quick gain in the short term and dump those shares. As I showed on the graph earlier, you saw that there was a giant dip, and I'll put it back up on the screen here. But you saw the giant dip in the stock price. Those were the people fleeing and selling and taking their gains ahead of the inclusion, right? So they made 200 plus on their investment. Take that, multiply by the whatever amount of shares that they own. That's a 70% return for whoever bought right at the November timeframe and stayed in up until now. So major gains there. That's one way to trade the stock market. Again, I am looking at the long-term view, and those quick moves are not necessarily what I would recommend. It can pay off, but again, timing the market, not always a great move. It's about the time that you spend in the market, not trying to time the market.
To your question of what our thesis is, listen, next year, right? Tesla has only been profitable 4 quarters out of their entire existence as a company since 2016, excluding credit revenues. These are government-funded revenues that Tesla gets. They weren't even profitable last quarter. Next quarter, for the most part, we believe those credit revenues significantly fall and in 2022 go away. The reason is because every automaker is now selling their own EVs. So if Tesla goes back into loss-making status, and when you add to that the fact that even the big jump in their Chinese revenues, their market share in China only went from 8% to 12.5% October to November. The prior high this year was 25%. So they're losing market share in China, and their EU market share has fallen from about 33% in Q4 to around just above 10% right now. So in the markets where you have competition, they're losing share. So as their growth slows, as their earnings turn back negative next year, we think there's going to be a significant sell-off in the shares. Institutional ownership right now, 41% roughly, nearly an all-time low. As people start to sell those shares and the retail money, which is driving the stock, starts to sell, we think there's going to be a swift downdrift in the stock. You've seen this before. I know it sounds crazy. Look at Tilray. Look at Sun Edison. Look at Suntech. Look at some of these stocks where they went from 5 to 300 back to 5. They went from 2 to 300 back to 0. It does happen, and we think Tesla is a prime candidate.
Okay, interesting case there. Yeah, especially because there's so many who are very bullish on the stock. Gordon, it's good to talk to you. Gordon Johnson, GLJ Research CEO and founder.
Okay, so what do I make of all this? Well, every argument that the bear case brought forward did not paint the full picture of what's actually really happening. If you think about where Tesla is going come next summer, they have 2 factories being built, one in Berlin, the other one in Texas. The Berlin factory will be supplying the European market, which is growing exponentially over the next few years. And the US with Giga Texas has the Cybertruck, the Semi, 2 new industries that Tesla has not been competing in up until now. So again, as far as I'm concerned, it would take something rather significant in the fundamentals of the company for me to change the course of my investment strategy. So do I expect that Tesla will experience a sell-off in the coming weeks? Absolutely. How significant? I'm not really sure, but if I had to take a guess based on previous trends in the market and what I've seen from Tesla, I would expect that after such a massive event, which is the inclusion into the S&P500, the stock will dip anywhere between 10 to 30%. And so that may sound pretty scary, but remember what I said. Every time your favorite stock pulls back, it's an opportunity to buy more. So what will I be doing? If we see that pullback in the amount that I expect, I have money set aside and I will be buying. I will be reinforcing my positions so that when it goes back to the current high of 695, I will be in a much better position than I was before. So that's my plan. Again, I think it's important to listen to both sides of the story, to fact check whether or not you're thinking straight and whether or not you need to be adjusting your theory and your investing strategy. Okay, so let's bring this video to a close with our weekly percentage gain or losses review. So pretty rough start to the week, going as low as 8% at the very bottom of the market, but made our way back for a weekly gain of 2.3%, as you'll see a little bit later here. And again, the goal here each week is to ensure that we end in the green as you march steadily towards your goal. You can't see a trend on a daily basis, but looking at it from a weekly basis, you can start seeing that trend, that positive trend or a negative trend. But the goal is to see that trend heading in the right direction, which it is at this point. All right, people, this will do it for this week's episode. If you found the content insightful, like, subscribe, and ring that notification bell for all future content. I post every Sunday. Until next time, stay humble, hustle hard, and I'll see you in the next one.